Good morning, everybody. Welcome to the Flow Show. It's ECB day. Another one to go. Oh, bloody knackered. How you doing, Kate?
Good morning, Ryan. Good morning, everybody. Yeah, I'm with you. It feels like we had already a week and a half in the first 3 days of this week. So yeah, feeling already a bit tired.
Yeah, definitely. But more pips to be made. Hopefully not lost in the next couple of days. So we will plough on through. Lots of stuff going on. We're going to start in Japan and with a bit of data. There's been a few dominoes dropping overnight. BOJ members, data, whatnot. Labour earnings year on year up 2%, smashing expectations, smashing last month as well. Overtime pay going into the positive. Overall wage increase or wage income for January smashing it 2%. Even real cash earnings were better, still negative, but last time they were down 2.1%. Now they're only down 0.6%. So real cash earnings potentially on their way turning positive. So those are some good numbers for the BOJ on the wage front. More good news potentially for the BOJ on the wage front is from some of the unions that we've had headlines from. The big industrial union, UA Zenzen, said that full-time workers so far have won increases of 6.7%, including a base rate pay rise of 5.15%, which is bigger than 2023. The big agency union Rengo, who apparently they were going to announce next week their first round of pay talks. They've already said that average wage demands have come in above 5% for the first time since 1994, and the current level is 5.85% versus the pay deals they got of an average of 4.49% last year. So the wage box is being ticked in a big way over in Japan. That's said good news for the Bank of Japan, good news for the government. We've also had a Bank of Japan member, Nakagawa, changing her tune slightly, turning slightly more positive. I won't go so far as to say hawkish, because there's still more stuff to be done. But last time I saw her speak, that I can see, was in September, and she was continuing to say that easing was appropriate. There was no timeline for changing policy. Now, Japan's economy is making steady progress towards achieving their price target. But she wants to see more data before deciding about ending easing. On the question of March, says we still have 10 days until the next policy meeting, during which she will look at various data, or they will look at various data from and from hearings we conducted, also any other available daily data. So another member turning into the positive camp. Then we had Bank of Japan's Ueda. He said it's possible to exit stimulus measures while striving to achieve the 2% price target. So in the same way that the Fed and other central banks have said they don't need to hit and have the level sitting at their target for them to start cutting, well, the same is on the other side for the Bank of Japan. They don't need to have inflation solidly above 2% to start exiting easy policy. So one's going one way, they're going the other way. Said the likelihood of achieving 2% inflation goal is gradually rising. That's a bit of a repeat comment. They said they will consider rolling back stimulus measures once the positive cycle of wages and inflation is confirmed. And that's why dollar yen is all the way down, nudging 148, well, through 148 again as we speak. Okay, it's a perfect hat trick. Data, two central, well, yeah, more than a hat trick. It's 4 goals: data, central bankers, and wages.
Yeah, absolutely. The perfect cocktail, right? To prepare the market for the exits. And as MUFG was saying yesterday, perhaps we do need to keep the the March decision wide open. Yeah, it's getting closer, and all those wage talks seem to go to the positive side. That's something that we have to take into account, and that's what the market is reacting upon. I was looking at the shorter end Japanese yields this morning. They've already ticked up 20 bps gradually since the start of the year. They're adding regular BPs on every one of those comments. So that's what the market is trading. We were talking about it yesterday. Timely discussion about it, but we were just watching the game. That's a bit unfortunate, but all right, we've that's trading for you. Some you will miss, and others you will really enjoy the trade. So yeah, we are approaching the decision time. We are approaching the whistle for perhaps even just the start of the game, right?
Yeah, very much so. Yeah, we were a little late with our calls for that one, but I'd rather call them and be right and not in it than call it and be wrong and in it. So there's always two sides to the story. But yeah, we will both say this day we fancy being on the short side of dollar yen on a nice rip. Well, that didn't happen, and here we are, 200 pips lower. And that is life. But yeah, I mean, this March does seem to be increasing a bit in terms of expectations. I'm still not sure. Unless they give us more comments along these lines, setting up a March hike, I still think it might more be a meeting where they say, yeah, we're very close, not quite there for this meeting, but next meeting, next one or two meetings, we're going to go. But it might not be, it might not matter anyway. As we've been saying, the market is reacting now to the possibility of them easing. So this is your buy rumor move at the moment. So it means that when they do finally act, probably won't get anything more than a confirmation move, because the market will be fully priced by that point. This is central bankers drip feeding and getting the market to do its expectation trading now, so that when they do announce, there's no big waves then. But yeah, but I'm still not certain we see a huge amount more downside on all this, Kay, because we know they're going to be slow and steady, unless they do come out with some big guns. Then maybe, I certainly wouldn't want to be short, 5 minutes before they announce they're going to do something. I'd rather be short at better levels, but it looks like we might have to sit and watch this one go.
No, definitely, mate. The thing is, as well as I've been saying, there will be a mechanical impact on the yen, but then it will depend on how much it will be in the end, and that'll depend on speculation, but also in the end what the Japanese investors want to do. Yeah, if they need to repatriate money and stuff, then it's probably going to have a bigger impact. But yeah, we can't rule out these kind of moves on decisions were to be expected. And I'm still not. I'm increasing the possibility that they do it in March, but I'm with you. I'm still not convinced that they will do it in March, and then we perhaps will get better levels to go in April. Yeah, that's a bit where we are. I mean, well done, because there's a good few people in our room who I think are short yen pairs. So that's very nice. But I mean, we also know that a lot of people have been suffering on the same kind of trades for weeks, and but now it's very nice that they get some of it back. Yeah, I think. I mean, stick prices onto it. Yeah, I would say that 146.80 level on the dollar yen. The dollar yen is a bit of a could be a bit of a naughty one in the next couple of sessions, because it is finding sellers on every rally now, and then tomorrow we have the US jobs report, so there could be a double whammy or a saloon door in the making. But just preparing that in yen terms, I reckon if we see a decent move back up, if the jobs report would be better than expected, again, I still trust we will find sellers in yen pairs, because people are now getting confirmations or strong hints, let's put it that way, that the wage debate is going to go quite positively. So that is likely going to see now sellers on every rally in yen pairs.
Yeah, as I said in the chat, I'd like to see a nice 2 million gain in NFP to hit a rally on that one. But yeah, I doubt we'll get that. But we can. We'll see what happens. We'll see what happens. But I think, yeah, we said it yesterday. Dollar yen rallies are likely to be hit now, and NFP will be very juicy if it's a big strong number for some people. But that's for tomorrow. Right, moving on. Kay, your thoughts on the Swiss reserves that was out, numbers that were out this morning?
Yeah, it's likely due to revaluations, right, from month to month. Is that expressed? I need to find it back, because is it expressed in dollars or Swiss franc then, those reserves? That's because if it's also down to revaluations, right? The Swiss franc has weakened over the course of 2024 gradually. So a lot of those increases in the reserves, we can't rule out here and there a bit of support for stuff, but a lot of those reserves will be increases are down to revaluations because of the Swiss franc being a bit weaker. So that's the main thing. What we can say about that, really. Yeah, I don't have anything else to say. It's keeping the Swiss franc probably more offered, but we see a bit the opposite move, because the euro crosses are quite fragile today, and euro Swiss is also coming off a bit, but it's still like a bit, you know. Yeah, dollar Swiss is relatively stable. That one is likely going to see a bigger move tomorrow on the US jobs report, but for now, looks as if the market is going into the ECB generally a little bit on the defensive on euro crosses, and euro Swiss is no exception. But on the reserves, I don't think it should be a big surprise that when Swiss weakens, they increase a bit.
Yeah, thanks, mate. Right. Oh, lost my place now. Right, where are we going? Over here. Right. Next up, we had the UK budget yesterday, which went largely under the radar. No real market moves. Growth forecasts were raised. 2024 now seen at a huge 0.8% versus 0.7% prior. 2025 was ramped up to 1.9% from 1.4%. 2026 was up by 2 pips as well to 2.2%. Not that these forecasts matter, particularly from the OBR, because they're about as good as forecasting as some of the banks. But tax cuts came, which were fairly well received, although there's a bit of moaning going on this morning. There was a snap poll run by someone straight after that 3/4 of respondents didn't believe that the budget will do enough to help them with the cost of living. Because he cut national insurance and made a big song and dance about that, that's pissed off pensioners, retirees who don't pay national insurance, so they're not getting anything. But largely it's been seen in a positive light for the moment. So whether that's playing in Sunak's mind as to whether to now call a general election, I don't know. Probably need to see a few more days of reaction before, if he wants to make that sort of call. Over in Germany, I don't like to swear too often, but German factory orders absolutely shit the bed this morning, down 11.3%. We're only expected to fall 6% from a prior up 12% in December. That was revised higher as well. So whatever happened in December, got completely washed out in January. So green shoots have been stamped all over for January in the manufacturing sector there. Yesterday's data in the US, ADP was keeping a close eye on this one. It came out, I haven't even got the right bloody times on this thing again. Why is it not saving my times anymore? ADP came in okay, 140k, was expected 149k, so no real worries there. As I said, I was looking at to see whether there's any potential weakness in some of the sectors, services, retail, hospitality and leisure. There was nothing wrong in there at all. Gains in all those parts. So that side of the consumer thing, we're not seeing any problems there. Jolts were out as well, pretty much bang in line with expectations, depending on what calendar you use. So nothing to see there. Then we got power later on, which again was another bit of a snore fest. He didn't deviate from the script. Usual stuff, needs more confidence on inflation, still expects to cut this year. Says that if the economy evolves as they hope, interest rates will need to come down significantly over the coming years. Now, dollar has reacted. Dollar's been on the back foot. It's still on the back foot. Yields came down as well. Purely, as we said yesterday, it's not just what he does say, it's what he doesn't say. He didn't put a huge pushback. It didn't change his tone given the recent data, the sticker inflation and whatnot. So it was business as usual. So if he didn't say anything less dovish, then the market takes that as, you know, they're on their way. So there's no need to ramp up yields or anything like that. And in fact, they went the other way. Fed's daily was out as well, saying rising housing costs have been the key driver of higher inflation. And the higher interest rates do raise housing costs temporarily, but are needed to bring down inflation. And it says holding on too long with rates could create an unforced error and hurt the economy. Fed's cash and carry said that his base case is no more rate hikes, but that if inflation flares again, it could justify a hike. He said that in December he had expected 2 rate cuts in 2024, and it's hard to see that he would now expect more than that. We got the Fed Beige Book for February, which is a bit of a scorecard, if you like, around different Fed regions, a survey just asking how things are going on. The overall headline from that was that economic activity had increased slightly on balance. Some businesses found it harder to pass through higher costs to their customers, who have become increasingly sensitive to price changes. So that's telling us that higher prices are starting to weigh on the consumer. They're becoming, as it says, a bit more sensitive to higher prices. Again, that's something that we've potentially seen in the retail sales and whatnot. They said consumer spending, particularly on retail goods, inched down in recent weeks. So again, this is for February. So wages grew further across the districts, although several reports indicated a slower pace of increase. But on the other side, employment rose at a slight to modest pace in most districts. So not seeing any jobs weakness yet, but potential price sensitivity coming in. We'll see if that's borne out in the next lot of data that we get over the next month or so. BOJ, another snore fest, kept rates unchanged at 5% as expected. Macklem says it's still too early to consider lowering rates. Says shelter price inflation is weighing on our decisions. Said it was clear that the consensus inside the governing council was that rates needed to stay at 5%. And they also said we are not going to be lowering rates at the pace we raised them. After that, Canadian money markets reduced their chances of an April rate cut from 43% to 23%. So a washout of those expectations. Biden's been on the election bandwagon. Good news if you're a billionaire or a business in America, because he's going to propose big tax rises on you lot. I don't understand how you can come out in an election campaign and tell everyone you're going to slam them with tax hikes. Well, that's down to him, but yep, not the sort of headline you would expect in an election year, but that's what he is proposing anyway. Let's see if it does him any damage at the polls. Okay, anything you've got that we need to know about?
No, actually, I was going to comment on that Biden stuff, but you just did it. So that's my
Oh, your thunder.
That's my sheet all checked. we can move on to what's going to happen.
Yeah, we will. So ECB today, and what are we going to get from those clowns? Well, half of them are going to be dialing in because there's a load of strikes in Germany affecting transport and such. So half of them can't get into the office. Lagarde will probably be on a bike or go by owl or something like that. A fleet of owls flying her in. We'll have to see if De Guindos is propped up on a TV somewhere and dialing in via Zoom. So, yeah, we'll see what that brings. No expectations for any policy change, of course. It's all going to be about the chatter. Again, probably a bit like the Fed at the moment and a lot of central banks at the moment. I don't see any need for them to change their rhetoric. They've still got a job to do on inflation. Things are moving the right way. We will get cuts at some point, yada, yada, yada. What this does for the euro, I don't know. It should pass by, unless there's so many big headlines, it should pass by without too much of a fuss. You got any expectations for this one, Kay?
Details perhaps, but as we've seen, yeah, inflation a bit sticky. Yeah, she's probably going to talk about the green shoots because there's not a lot else to talk about. I thought March would be somewhere decision time for the PEPP, APP, and whatever else, but we've already had most of that. So I don't really see what really new she can come up with. A dovish tilt would be kind of a surprise, although we have seen the divergence between the hawks and the doves getting a little bigger. Some are saying that we are in territory where everything's all the pressures are coming down, and they are probably going to hint at earlier cuts or so, but the hawks are still there and advocating for holding. You know what? If you take or if you compare like ECB to where the FOMC is at and where Powell was at yesterday, it's very, very similar, right? Although there is a huge difference in growth, economic growth right now. The US is still doing a lot better. But if you look at the behavior of the euro in the market, it is relatively similar to what the dollar is doing versus other things, right? They're both a little, even though we cannot compare all currency pairs. But if you look at, for instance, the euro crosses this morning are a little bit on the weaker side as well. The euro dollar was capped above 109, and so you've got a little bit of the euro dollar in the one camp and the rest in another camp right now, and that's sort of expressing what the market sentiment is expressing right now. So I don't expect much from her, to be honest. Anything outside the white lines is already going to be a surprise for me.
Yeah, I think so too. You know, we had stories previously about them potentially maybe doing something narrowing the corridor between the deposit rate and the main rate, so that may pop up. Like you say, they've been pushing QT and stuff around the plate for the last few months. It is a forecast meeting, so that may be where we get some market moves. The last forecasts obviously coming in December. We had that sources piece that they might revise down their inflation forecast for the next couple of years. So yeah, that may be where we get any action. And say if they draw those down too far, maybe that they take 2025 under 2% or something. That might get the market a little bit bearish on them.
Yeah,
but,
and that's already what we see, I reckon, Ryan, in the preparation for the ECB meeting. I think the market is already half trading it, and because of those sources pieces, because of they haven't been doing anything else than to revise growth lower, and growth will matter as well, you know. And if they now start to revise inflation a little lower, it may weigh on the euro. Perhaps again, euro dollar sticking very, very sticky inside a range, but it may happen more on the cross side of things.
Yeah, very much. I like your comment there, Gav. She can get on her bike as far as I'm concerned. And Kay said, yeah, no, she sold it for another sunbed. I like that one. Yeah, also remember to watch out for the tan gauge that I'll put out a bit later, just to see the level of her tan, whether it's hawkish, neutral, or dovish. We always like to measure that and see if there's any owls on her clothing or whatnot. So, yeah, I'll spend more time taking the mick out of what goes on than actually listening to what they're saying, these usual things. Right, let's have a look at some prices. We're getting some moves. Wasn't really expecting much this week. Yeah, we might get some moves, but we'll see what they do. We obviously had breakouts in gold, new highs in stocks and whatnot. And the Euros finally decided to bust a move. And where did we say the resistance point was going to be? 109 and into that fib. And the high yesterday was 109.15, 2 pips shy of that 50 fib, which, as Blake would say, is close enough for government work. And we haven't really been able to hold a gain above 109 just yet. So we're not out of the woods yet. The trend is continuing though. So this is a healthy move, a bit of a break. We know where the levels are now. The support, the main support, we're trying to build some here around those previous highs, 108.80, 90. So that's where we're just trying to find a bit of support now. But the main support area is going to be down here, 60s, 70s, this break area that we were banging our head against for quite a couple of weeks. So if we get support in there, that will be pretty good for the trend overall, and would suggest that maybe we're going to have a further move higher. But then we've got this whole zone to deal with again. So see where we are after the ECB. On balance, I'd more be a dip buyer on anything that sounds a bit negative from the ECB rather than a rally seller, but it's 50-50 from here. I'm core long, so I'm enjoying this run anyway, but I don't mind trading short term in between those numbers. Cables joining in as well, having a little mooch up. Had a high yesterday, and now we're just trying to have a go at that high again. Really, we're not even getting up to these prior highs, 70s, 80s, which is where you'd perhaps expect it to get up to. So that we run into a bit of trouble before there. Suggests that there's still some good selling up here around that. If we get above there, we're probably going to take on 128. I wouldn't be surprised to see that go. But cable, for lack of anything else, is going to be a bit of a follower, more on what the buck is doing, probably than what's going on in the quid. As you can see, the usual vol difference is kicking in between euro, dollar, and cable. Cable sometimes moving more in these situations against the dollar than the euro does, hence why euro sterling is on the soft side a bit here. But we're talking 20 pips over the course of a couple of days. So this one is still largely in its consolidation phase, going sideways. No real reason for it to bust out anywhere at all. Look at Aussie dollar just having a crack of the 66 level, which has been.
Don't jinx it. Don't jinx it.
No. I'm just saying what's happening. I'm just saying what's happening. It is breaking 66k. That's a fact, not speculation. Yeah, I know you're long on this one, so nice grab on that one, mate. 66.20 is probably the bigger level up here, and then 66.40, which was that level that we had in the breakdown in January, where we had a couple of goes, and then it was, as you can see, the significant break. So 20s, 40s are going to be the big numbers up here, and if it gets up there, K-Man will be a happy bunny. Right, mate, do you want me... well, just have a look at yields quickly, and I'll pass the buck over to you. As well as what we've got going on in dollar yen, or in yen, there is a heavy influence of dollar weakness here. You know, we were talking about this 420 level. It is breaking down now. We've hit down around this 410, 409 area. It's had a little bit of a bounce, but it's looking very dead cat at the moment. So this is part of the influence of what's going on in the dollar. Hence why we're seeing cable, euro, dollar up, and some of the yen crosses not following with as big a moves as we're seeing in dollar yen. So it's a bit of a cross currents, if you like. The seas are a bit choppy in terms of what's going on, but I'll let Ken look at Kay look at some of the yen crosses. Right, mate, over to you.
All righty.
If I can find a button, there we go, and there we go.
I will come back to the Aussie because I've got a slightly different picture there. And don't worry, Ali, don't be sad. Don't be sad. We're talking about the Aussie dollar right now, you know. So yesterday, in our room, we had another chat about this zone here on the Aussie dollar, and a few of us just went for it, and we bought this break here. Been managing a bit of the position so far, and as Ryan already said, there's still levels coming up, but I do think that this 66 is already 66 figure of 66.10 is already half decent enough to monitor. Of course, we have and it stretches to here really. We have activity in here as well. But there's some positive vibes going through the Aussie and the Kiwi right now, and we'll have a look at the Kiwi as well because we are in the zone there too. It's been a bit of the dollar's been sold yesterday, and I'd argue a little as expected because since the start of the week, as I've been saying, I've said like, well, there's maybe something we were capped in those yields as well on the dollar, as you can see above here. 10s is trading around 410, and then the 2s back at 455. That's below the dots, regardless what Kashkari may say, that he's actually not excluding a hike, but I don't know what he smoked yesterday, but okay. So here, I think it's already good enough, but we have to stretch, of course, this thing. This is going to be an important zone for tomorrow's NFP. So I've taken half of what I had, and I'm happy to run now if needed until the NFPs. If we get up in the mid 66s, probably take out of a little bit more, just banking the pips, and then go sit back and watch the jobs report show tomorrow. Because I think that's really our next big rendezvous with the dollar. We've getting another round of power this afternoon, but usually it's just a repeat of what he said the day before, and some more naughty or stupid, as we can call them, questions from other politicians. I've always been watching this 40-65 zone in the Kiwi as a bit of a big area, right? And now we should be adding 61.75-80 as well. But it's going in the same line as the Aussie dollar, and it's relatively positive, you know, the developments here. So already looking forward to what can happen, because we don't have much out here, the claims. Well, let's talk about those claims. I wouldn't look at the initial jobless claims because they usually come out not too far from expectations, but the continuing claims, as has been said, they have been creeping up. So I think any negativity in there will likely be used by the market to add a bit to the dollar bearishness ahead of the NFP. So we could go into relatively weak levels on the dollar pairs into tomorrow's US job report. That's how it kind of looks. Also, if you look at cable, for instance, I know Ryan already showed the cable, but got a slightly different picture because I'm small long of it as well. I bought this, yeah, started to buy it around here and then added a bit and took a bit off on this first breakup, and then now we're against a little bit more of a resistance here, take it up to 75, 80 or so. But the cable as well, we've had like one retest yesterday afternoon. We had another one early this morning of this triangle break, and for the time being, it's holding. So what have I done? I just put my stop right under there. I don't want to give anything back, whether it be today or tomorrow's jobs report. So I just want to secure what I made so far, and then not running into any losses with the additional bit of the position. And then for the rest, I'm going to try and let it run. May take off a slice more just to be half or a third in, and then see what happens tomorrow. But it's looking constructive. I need to show what happened because in addition to that 50% that we've been talking about yesterday, the euro dollar banged its head against the daily cloud. So over ECB, potentially over tomorrow's jobs report in the US, I'd say watch this level, okay? 109.17, as Ryan already said as well. And then just above, it's a very thin cloud. So usually when the cloud is thin, it's not going to have to do too much work to break through it, okay? And as compared to when a cloud is thick, it can have a lot of work to do before we can get through it. If you get a move through 109.30, we could see an acceleration there. But then, as you can see, there's levels nearly every 15, 20 points. We really will have to clear 109.75 to open to clear the skies and go for a move into the 110. If not, it could be that we mooch around, just keep trading ranges in this euro dollar and the rest of the euro pairs being on the move. One, of course, that's been on the move is this euro yen, and we're running into support, or let's call it interesting levels here around 161, 160, 80, 85. So that may be, if there's any dovishness coming out of the ECB, that may really be where euro yen gives it up more, and we could be in for a run down to 160. Why not? Yeah, 160 for a starter, and then we will come back into an interesting zone. Also, I'd argue that the 160 will be a bit psychological on what the market wants to do running into next week. Wage talk decisions, right? So that is another one that we need to bear in mind for when you trade euro yen here. What else? Also traded a nice short. Yeah, Angela, if you remember, I don't know if you were on our show when I spoke about that 167 on the Euro Aussie. I didn't really trade it, but I said like, well, move back below 167. We could be on our way to 166 again, or 165s, and that's exactly what we got. The antiponians, Aussie and Kiwi, are really quite beat right now, and we find it back on a lot of pairs. Even if you would look at, for instance, Aussie yen, Kiwi yen, they are giving back a lot less than what the other crosses are giving back. Yes, we're having this yen move, of course, but then You see, even this move, we're still not giving back as much as other currencies are giving back versus the yen, right? So that expresses your positivity in what we see in the antipodians. I see what you want, Dirage, okay, but we need to look at the Swissy just for the update. It's starting to reject. I thought we could go and have a look here, but it's starting to look a little bit as if the market isn't trusting much on the euro, a bit similar to what's happening on the dollar side of things. Let's see what the ECB comes up with. If Lagarde remains completely neutral or even a little hawkish, talking about green shoots and stuff, even though this morning's German numbers weren't looking very green. If she keeps the positive side, I think we are going to hold well above perhaps even 90, 95, 40, 50 and start to creep up again. But we can't exclude a little bit of a dovish slant or so, or the market being, regardless what she says, trying to sell off. So I watch what's happening in the 95, 40, 50 if people are long Euro Swiss. I've managed it a little bit. I've also managed my dollar Swiss a little bit because of the less positive vibes on the dollar in general. Still, I would argue 87.60 is going to be an interesting level there on the dollar Swiss, but that's likely for tomorrow. What I would like to quickly look at, I'm going to look at the Reges gold, right? Yeah, it's broken all-time high, and it's broken above this 161 161.8 extension, right? So I've looked at it this morning, and there's not a lot I see before the next round of extensions, which would be not before the 2220s, but since it's been a lot flow driven there, this gold, we need to monitor for possible exhaustions or people starting to be a little bit tired of paying highs with the eyes closed. So I'd say the first level that we need to look at here is 2135, but I would specifically look at 2116 here, 2115, 16. If it starts to turn around, this level could already be where shorter term guys and girls put stops below, and of course the prior 2088 here, but that's now a while away. But there's very little to see on the very tight levels here. We need to take into account the strength and the amplitude of this move. So it's tough to put like levels down to the actual dollar or too close to the market. So I would say 2135, 2116 are your first levels. And if this holds or close here, I don't see what's going to stop it before 2220s. That's
Don't forget your cup and handle there, Kay.
oh my God.
Everyone's
Is that
been talking
what?
about.
Where is that? Where is that coming in? 2400, right?
Yeah, something like that.
People
Yeah.
are talking
Oh,
about
no,
2400. Yeah. All right.
no, it's bigger than that,
2180,
mate.
I don't know, Angela. I haven't seen the 2180. What is the 2180? I really don't know. I see people talk about 2180, but I'm looking at my indicators. I'm happy with those that I have, and a lot of people are talking about a lot of stuff, and but I try to keep it relatively simple. Okay, last one, and then I give it back to Ryan. We need to look at what's happening in the mix, because today we are having the Mexican CPI and Mexican PPI, and I've been talking about the mix over the past days because we had a reaction. I'm voluntarily on a very long-term chart here because Ryan spoke about this level as well, and I think it's important to note. We've had those reactions on the Trump first victories, right, in the mix, because Mexican traders were worried about building more walls, doing something about the immigrants, keeping the Mexico out, not being very friendly. So we had these reactions, but in the last round of Trump's victories in the primaries, it didn't react at all. So first of all, this comes all the way from the global financial crisis, right? This level, and I need to adjust it a little bit because I'm a tad too low with this one. I caught it there. There. So the very, very long-term trend line, and I'm getting closer to where Ryan's level was, right? Is in the 1660s, which is sort of where this prior July 2023 low was, okay? So then I'm going to tighten it a little bit, going on to the next time frame, and which is the daily, and there's another trend line coming in right around where it's trading right now, okay? In an hour's time, we are having, or 3/4 of an hour, we're having the CPI and the PPI. Look, if it's sticky, I can imagine this going for a little bit of a move lower still, and we could potentially get into those 1660s, especially as I said, if those numbers are sticky. It's still an 11% currency, and for as long as the Banxico doesn't move, it's very, very hard to be short makes for a longer time, because you're very, very quickly going to pay away a lot of pips. But I would argue that this zone is going to be quite important, okay, on the dollar mix. To start to move back higher, we need to get back above even 17, right? Start with 1695 and then move 17. If we start to move back above 17, then it's probably going to be more neutral, and we can start to trade this perhaps this channel again, okay? But in the meantime, I'd be very cautious, especially if you're short Mexican peso. It's just a little bit of a warning, and I don't like the way it's been trading here for trying to catch a knife. And another one that we need to look at quickly is, for the same reasons, we have a potential double whammy here with the ECB and those Mexican data. We are on a support zone here, anywhere between 1830 and 1836, okay? We are right there. It's trading right above. But if you look at the bigger picture, it's still, in my view, a bit of a negative one here. And that's still having to do with all those yields. And with still, I mean, Mexico is still producing a lot for the United States and the American continent. So I'd still say we need to break above 18.5 here to get more neutral and to start moving up again. If not, if we would see a break of this 1829.30, I wouldn't rule out a revisit of those prior lows. That is just my view. And I think that's about it. Yeah, quickly post Bank of Canada. Or you want to look at dollar CAD?
Yeah, you can take it, mate. If you want to look at dollar CAD quickly, I just wanted to ask Ali, what did he do with his long yesterday? Did you get?
Yeah, okay, and okay, this is what happened here on the dollar CAD. I think it's potentially breaking down a little bit of this out of this wedge, but we still have to reckon with the one where we are now. 135, the figure 134.90. Look, this 50% here of a move, and then the 23.6 of this move is also here. So we have to take this into account. But if it would go for a break, we can get back to mid 134s. Mid 134s is where we have a little bit of activity. That's a possibility. Looking at the way the dollar trades, wouldn't surprise me if it gets down there. We don't really have any data trade balance this afternoon in Canada, but all right, good. I'm not sure whether that's going to be a big mover unless we see more green shoots over there. So that's a bit what's happening in the Canadian dollar. If you go back above, that's too close, perhaps. Well, yeah, 135.15. Yeah, okay. If you get back above, perhaps a little move up to 135.40, and then see what happens there. And that's it for me. Back over to you, Ryan.
Thank you very much, mate. That's it for today. We shall call it quits. Hope we've set you right for the day ahead. Trade well for the rest of the day, and we'll see you all bright and breezy tomorrow. Thank you, K-Man, as always. Have a good one, people.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.